Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, the news that moves the markets, and we're almost halfway done with 2022. So moving into June here, got a couple things to look at on the charts and in anticipation of the Fed Reserve announcement or expectation of non-announcement this summer coming up here in a couple weeks. So Robert, back in the studio. How are you doing today?
I'm doing well. Good to be back with you, Miles.
Yeah. That's going to do it this week for Golden Rule.
Is this week just a big yawn in the metals market?
It kind of is.
Or is there something else kind of going on here? From last week, we haven't had a whole lot of price action, except platinum has moved up here in the last few days. And
platinum did take a nice jump today.
Actually penetrated through the short-term high, and something that we could pontificate about is that platinum is maybe leading. Not positive that's the case, but it did bottom and formed its bottom there at the end of April. And then gold and silver kept coming down and formed a bottom a couple weeks later. And when gold and silver were forming their bottoms, platinum had already formed a bottom, and that little sell-off there at the beginning of when silver and gold were making their bottom, platinum didn't create a new bottom. It actually held above the previous lows, and then today, Wednesday, moving higher and kind of penetrating through that short-term previous high. So it's possible that platinum formed that bottom earlier than gold and silver, a couple weeks, and then now gold and silver have kind of formed a bottom. So we'll keep an eye on that, but that's something to note in today's action with platinum breaking out a little bit.
Yeah, I'm glad you bring that up because it is kind of the major action in the metals market this week. Platinum going back, we've now had 3 touches at that 909 level you're talking about. It was a ceiling going back to 2020. We had a big breakout move that brought platinum all the way up to above 1,300 and then a little compression move back down. But we haven't been able to breach below it. We hit it back in September last year, December, and again here, like you mentioned, back at the end of April. And we've put in 2 subsequent higher highs in between them. So the bears are trying to push platinum lower. They are very obviously not succeeding. And I think you're right. This price level we're at now, right around 993, it's this longer term 50% line. And if we see a break above that, you really need to see platinum get above this kind of chain of lower highs that we had just over the last couple months since March, capping out at around 1040. So I'd like to see platinum push above 1040. We are into June. It was sell in May and go away. So we're in the go away month. But July, August, right around the corner. Then we get into September and the markets start picking up again. So you see a little bit of sideways trading in here continue, but obviously we'll be into the fall before we know it. And where will platinum be starting that off at? And if it starts it off at 1040, 1050, I think you're definitely looking at significantly higher prices in platinum. I would like to see it continue the trend of higher highs, and it may not be too long before we're back in the 1300s on platinum. And then where do we go from there? So while we skipped over it, gold and silver, a little less exciting over the last week, but what are we seeing in the yellow metal?
Yeah, gold may have just made like a little bit of a 3 drives lower in the daily chart and hanging right here around 1850. I'd love to see it drive up to about 1910 and kind of bust out of what I think is the bottoming pattern here with gold. I won't be surprised in 6 months when gold's well back above 2,000. So these summer months where we see softness in the price, this is when I think you need to be taking advantage of that because higher prices are to come with gold. Silver has gone lower and has been kind of flirting with going even lower. Well, I think in the next few weeks, we're going to find out which one is showing the next direction, gold or silver. Is silver going to drag gold lower a little bit with it, or is gold's strength going to drag silver back up? We shall see. What do you think, Miles?
Yeah, I think you're dead on with gold. I mean, the thing I really like about gold is we haven't put in a significant lower low since, July of last year. We had that last touch down at 1680. What do you know? 3 bottoms at 1680. That sounds a lot like platinum that we just looked at. So we had these 3 bottoms at 1680. Then obviously gold charged on up and tested the old all-time highs and a little correction back down. But we bounced above the January 2022 low. Got down, I think, as low as around 1787, and we've come back up to kind of a reversing 382 fib and seen a little resistance there. So the 1910 you're talking about, looking here on the charts, you're correct. That's actually right at where sort of the high-end floor was back in March. You can see here on the charts, which is also going to line up with your 618 fib. So I'm in complete agreement. I want to see gold push above, let's say 1920, get a little bit above that 1910, 1915 point, get in a shorter term higher high here, and then start marching up from there. And I think that's completely reasonable over the next couple months through these summer doldrums to have it trickle up in the direction of the trend, which is a longer term bullish trend in gold. So the opportunities are going to continue to get fewer and farther between with these metals because of something Janet Yellen is now saying. She has no idea where it came from. Where did all of this inflation come from, Robert? How could the former Fed chairman of the United States not know the evil monster that they definitely didn't create themselves? That's what I want to know. So where is the inflation coming from and how is it going to affect us? Well, we know what the gold price is going to do, and I think we're seeing what the oil price is doing, along with food and clothing and everything else that we spend our monthly paycheck on.
Yeah, it just came out of nowhere.
Yeah, inflation. It's magic. It just appears. Nobody created it. It definitely doesn't come from the printing of money. That's not where inflation comes from.
Well, speaking of inflation, what about the dollar? The dollar had pushed up to right at 105, which is a long-term high on the dollar index.
I told you.
You told me.
5 years ago.
And I owe you. You won the bet.
Not really. You can't win a bet 5 years later. I don't think that counts.
All right. Well, the dollar did sell off from there, and it's had a little bit back of a rally. I think the critical level is the 100 on the dollar. And so we'll be watching it closely here. You know, it doesn't have to be that the dollar and gold go opposite directions. Sometimes we don't really even see that, such as recently. The dollar's been really strong. Well, gold has not been weak. And if you look at this gold chart over the last year and a half, you've had what, like 6 or 7 higher lows since that low at around 1680.
Right.
So as the dollar's been super strong, gold just has not gone lower. And I think that's building a pretty massive base for gold. So when the dollar does turn down and you get more pressure into the safe havens like gold, I think gold's ready to take off.
Sure, and I know it can be confusing because we'll talk about the dollar on the international scale, right? When we're talking about the DXY and the dollar index compared to the euro, compared to the yen.
And the euro inflation's picking up too.
Right. So we've seen this dollar strength. I know it can be confusing to the listener to hear us talk about dollar strength and the rising cost of living in the U.S. at the same time. And I think that's a good reminder that we're not the only people who are struggling right now as far as purchasing power goes. The dollar as a world reserve currency is holding its own, has done exceptionally well over the last few months, has gotten to new multi-decade highs, getting up to that 105 level. So a 3.5% reversal, like you mentioned, where we did decline and we bounced back up a little bit, but about a 3.5% reversal back down in the dollar is probably profit taking from the international forex trading community. So we'll just have to see where the dollar goes from here. But I think dollar strength domestically, I don't think anybody disagrees that that's going to continue down, including Janet Yellen, because she's scared of inflation now. So congratulations on figuring that one out. But internationally, who knows? Do we continue to see international money flooding into the U.S. dollar to prop our economy up slightly better than we would be doing by ourselves?
I think one of the big topics in the market right now is what's the Fed going to do with continuing to raise interest rates or not and reversing policy. And I've got just this thing that's been lingering on my shoulders for the last few weeks since the assumption in the market, I think is fair to say, that the Fed is going to at some point be forced to reverse the interest rate rise policy that they're on right now.
You don't say.
Maybe, but this idea of this administration's policies have been purposely done that's negatively affecting most Americans. And a lot of these federal institutions have been weaponized against a lot of our public. So even if the stock market were to continue down, who's to say that the Fed would even reverse course? Yes, that's maybe been the past action, is to reverse course when the market throws up or whatever. But who's to say that the Fed won't be weaponized in just continuing to raise interest rates and further damaging the economy almost on purpose so as to have the excuse of fighting inflation? Could the Fed potentially just not give the markets what they've previously been giving them and reverse course? If they were to not do that and continue to raise interest rates, things could get pretty darn ugly.
Well, and what's scary to me about that is I've been making the joke the last couple weeks about are we looking at a Volcker era where they're willing to take interest rates to exorbitant levels to cause the damage that needs to be caused to fix the problem?
Right.
Or are they going to do the Greenspan thing where they try as long as they can, and the second you have a major crisis that follows because of that, they immediately tank interest rates? So that's been the argument. Well, here's what's scary about that. We're nowhere even near what Greenspan was able to get it up to, let alone Volcker. I mean, we're still at fractions of what Greenspan was able to raise the interest rate to without having as dramatic an immediate effect that we're seeing currently. So what do they crash the rates into? We've only got, a 1.25% to work with at this point. Do we go ZERP? Do we go NERP? I love saying words like NERP.
Well, a lot of people might argue that rising interest rates could be negative for gold, but comparing the rising interest rates in the 70s to what gold's performance was at the same time, gold didn't even look at trying to get to a peak until interest rates were well over 15% in the late 70s.
Right.
So you had rates going up, gold going up, which might seem contradictory to what some people's perception is, but rates were already at 15% before gold even thought about getting to a high.
Right.
So we're nowhere near that. And so if the rates keep going up, higher rates does not mean lower gold prices. Actually, the 70s argue for quite the contrary. Higher rates equaled higher gold prices. Now, I don't think there's a direct correlation that 1 equals 1 or whatever on that topic, but gold didn't peak when the interest rates were 7 or 8%. It was well over 15% before gold even got close to a peak.
So in an out-of-control inflationary environment, gold keeps pace with inflation and protects your purchasing power. And in an out-of-control interest rate rising environment, deflationary, gold keeps pace and protects your purchasing power. Not a bad argument to make. So, Robert, thanks for joining in again this week. Always appreciated. If you liked what you heard on Golden Rule Radio, hit the subscribe button, ring the bell. Head on over to our website at McElvaney.com. You can find us on Twitter at ICA Gold or Facebook at McElvaney Financial. As always, if you want to chat with Robert, myself, or anybody else here at McElvaney ICA about your personal precious metals portfolio, give us a call at 800-525-9556.
Thanks for listening. Have a great week.